just finished my last auction. The total numbers of the day were 11 auctions, with 6 out of 11. And I have to tell you that there was 1 or 2 good buys today that I saw. Thought they would have got a little bit more, but they didn't. And again, it's the sign of vendors that are being scared by the media and potentially taking a figure today with the view that it's a better figure than it will be. Hey, Alan. Hey, Josh. Alan, you'll be selling your property. Hey, David, how you going? Hi to everyone. Luke, Ahmed, Matt, good to see you. So there is a few vendors out there that have got really spooked by the media and are actually, selling a property at a lot lower than they would have originally thought, but they have a view that the market's going to get worse. And it may or it may not. There is another interest rate rise most likely happening. Hey, Rod. Hi to everyone that's coming on. Les from the UK. So a couple of things I want to let you know. It's very obvious that we're becoming used to accepting the tail end of interest rate rises. I think, Jonathan, good to see you. Kelly, good to see you. So I think some buyers are pulling the trigger now, because I think a lot of buyers are thinking to themselves, if we're not at the bottom, I'm happy enough to buy within 5% of the bottom. And I think that's a great strategy if you're a buyer, to actually say, I'll either buy 5% before the bottom or 5% when it's going up. That's a safe sort of zone to be in. It's a lot better than trying to actually guess exactly at the bottom. But I'm going to say something to you that's really interesting. There is still no signs of distress selling. And the number one reason why there's no distress selling is because a lot of our owners are ahead on their mortgage payments. They put more money into their mortgage, and this has been confirmed by various banks I've been speaking to. So this week I had a meeting with Commonwealth Bank Private, and I also had a meeting with Mark Burris, who's one of the founders of Yellow Brick Road. And what's interesting is that they both talk about the event, and that is between July and December next year, there is a very high proportion of people that took out 2 and 3 year fixed loans, and many of these fixed loans are at 2% and under, and they're coming off their 2 year and 3 year contracts. So these people are going to end up going from 2% interest rates to 4 or 5%, right? So on the surface, you would turn around and you would say, this is going to be concerning because they're going to be paying significantly more. But what's very clear is the fact that there is pretty much no unemployment, and people are dying for employees. That even if it was to happen, think about it. And Mark Burris brought it up. If things got tough with repayments, there's so many jobs there, you'd pick up an extra 5-10 hours a week and you would work them. You would do that more than going off and selling your property at a super, super cheap price. So this is what's different about this time where we've had a market downturn. Whenever you have a market downturn that you see a really long-term drop in real estate, you normally see it aligned to unemployment as well. But that is not the case. This is what makes this market so interesting, that there is no distress selling, and it looks like there won't be any distress selling if unemployment doesn't change dramatically. So overall, that's a pretty good story. It's a pretty good story. And as Justin says, the majority of people now have become so socially media savvy that they're educated in real estate, and they understand they're not making a temporary decision based on 6 or 12 months. Most people I know are making decisions in real estate that are going to be serving them for 5, 10, 15, 20 years. So they're not looking at a short period of uncertainty to impact their long-term plans. And all I'm going to say to you is that October, November, December, we have a straight run of real estate. I can tell you this will probably be the 6th week in a row in the Sydney and Melbourne market where the clearance rate has been the highest it's been for most of this year. In Sydney alone, I can say to you that we've had 5 weeks where the clearance rate has been over 60%. So the dark period that we were facing in real estate around May, June, July, we seem to have gone through that now. There is an acceptance in the market. There is an acceptance in the market that this is it. And buyers and sellers are transacting. So, team, I'm going to sign off. Nabil says, what could happen if interest rates keep on rising? Well, as I said to you, that because there is so little unemployment, you'll find that a lot of people actually just pick up a little bit of extra work and cover the extra repayments. Anyway, team, signing off.